Stop everything you're doing right now, because what's happening in the silver market could change your financial future forever. While you were sleeping, silver just shattered through $77 an ounce. And here's what the mainstream media isn't telling you. The big banks are in full panic mode. They're scrambling, they're buying, and they're trapped in their own game. This isn't just another price spike. This is the perfect storm we've been warning about. Decades in the making, and it's finally here. Industrial demand is exploding. Supply chains are breaking. And the institutions that spent years suppressing silver prices, they're now fighting each other to get their hands on physical metal. But here's where it gets really interesting. We are potentially witnessing the greatest wealth transfer of our generation, and most people have no idea it's even happening. The gap between paper silver and physical silver has never been wider. The premiums are skyrocketing. Dealers are running dry. In the next few minutes, I'm going to show you exactly what's driving this surge, why $77 might just be the beginning, and the 3 critical things you need to understand before this market goes completely vertical. This could be your last chance to position yourself before the real explosion begins. If this information is valuable to you, smash that like button right now. It helps us reach more people who need to see this before it's too late. Let's dive in. So let me paint you a picture of what's actually happening right now in the silver market, because this is absolutely unprecedented. We're watching something unfold that market analysts have been predicting for years, but when it actually arrives, it's still shocking to see it play out in real time. Silver hit $77 per ounce, and I need you to understand what that really means beyond just a number on a screen. Think back to just a few years ago when silver was trading around $18 to $20 an ounce. We've seen more than a 300% increase. The velocity of this move is what's catching everyone off guard. But here's what makes this different from previous silver rallies. This time, the fundamental dynamics have completely shifted. We're not just dealing with speculative fever or retail investors piling in. We're dealing with a structural shortage that's been building for decades, and it's finally reaching a breaking point that even the largest financial institutions can't control anymore. The banks, particularly the major bullion banks that have historically held massive short positions in silver, are now in an impossible situation. For years, these institutions profited by essentially betting against silver, keeping prices suppressed through derivatives and paper contracts. They could create unlimited paper silver on the futures markets, controlling price discovery and preventing silver from reflecting its true supply and demand fundamentals. But physical silver is finite, and that's where the trap was set, not by any conspiracy, but by the simple laws of economics and physics. Well, what we're seeing now is these same banks being forced to cover their short positions and actually acquire physical metal. When you're short and the price is rising, your losses are theoretically unlimited. Every dollar silver climbs represents massive losses for those holding short positions. And here's the kicker. They can't just create physical silver out of thin air like they could with paper contracts. They have to go into the actual market and buy real, tangible metal. And guess what? There isn't enough available at anywhere near current prices to satisfy the demand that's been unleashed. Let me explain the industrial demand side of this equation, because this is absolutely critical to understanding why we're calling this a perfect storm. Silver isn't just a monetary metal or an investment vehicle, it's an absolutely essential industrial commodity. Every solar panel requires silver paste for its photovoltaic cells. Every electric vehicle uses significantly more silver than traditional combustion engine cars. Your smartphones, computers, medical devices, 5G infrastructure, and countless other technologies depend on silver's unique properties as the most conductive element on the periodic table. Now, governments around the world have committed trillions of dollars to green energy transitions. The United States, the European Union, China, India, everyone is racing to build out solar capacity, expand electric vehicle production, and upgrade electrical grids. Each of these initiatives is incredibly silver intensive. A single solar farm can require millions of ounces of silver. The International Energy Agency projects that silver demand from the solar industry alone will more than double over the next 5 years. Electric vehicle production is expected to continue its exponential growth curve. And we're talking about structural multi-decade demand trends that aren't going away regardless of short-term economic cycles. But here's where it gets really interesting and really concerning for the supply side. Silver mining hasn't kept pace with this demand explosion. In fact, primary silver mining has been declining. Most silver actually comes as a byproduct of mining other metals like copper, lead, and zinc. When those base metal prices are low, or when mines get depleted, silver production suffers. There hasn't been sufficient investment in new silver mining projects because prices were kept artificially low for so long that it was not economically viable to develop new deposits. The recycling side of the equation doesn't help much either. Unlike gold, which is mostly recycled because it's used primarily for jewelry and investment, silver gets consumed in industrial applications. Once it's used in a solar panel or an electronic component, it's essentially gone. The quantities are too small and dispersed to economically recover. So we're literally consuming the above-ground silver supply at a rate that far exceeds new mining production. According to the Silver Institute and various mining consultancies, the silver market has been running a deficit, meaning consumption exceeds production, for multiple consecutive years now. This deficit has been filled by drawing down existing stockpiles, but those stockpiles aren't infinite. Eventually, you run out of inventory to draw from, and that's when price has to rise dramatically to either reduce demand or incentivize new supply. We appear to be hitting that inflection point right now. Let's talk about the paper versus physical disconnect, because this is absolutely fascinating, and it explains why so many sophisticated investors are paying attention. On the commodities exchanges like the COMEX in New York, silver trades as contracts representing future delivery of physical metal. For every ounce of actual silver in the COMEX vaults, there might be 100 or more ounces of paper claims on that silver through various derivatives and contracts. This works fine as long as everyone doesn't try to take physical delivery at the same time. It's similar to fractional reserve banking in that sense. But what happens when faith in the paper system breaks down? What happens when investors and industrial users decide they want actual physical metal in their possession rather than a promise of future delivery? That's when premiums explode. That's when you see physical silver coins and bars trading at 20, 30, even 40% premiums over the spot price. That's when dealers run out of inventory and have waiting lists stretching weeks or months. And that's exactly what we're witnessing right now across the silver market. Go to any major bullion dealer website right now and you'll see premiums that would have been unthinkable just a couple of years ago. You'll see products listed as out of stock or on back order. Talk to dealers and they'll tell you their suppliers can't keep up with demand. The mints, government mints like the US Mint, the Royal Canadian Mint, the Perth Mint, they're all struggling to produce enough coins and bars to meet demand. This is the physical market screaming that something fundamental has changed. Now let's address the elephant in the room, the role of monetary policy and currency debasement in this silver surge. Since the financial crisis of 2008, and especially since the pandemic response began in 2020, central banks around the world have expanded their balance sheets to levels that would have been considered insane just a generation ago. The Federal Reserve's balance sheet went from under $1 trillion before 2008 to nearly $9 trillion at its peak. The European Central Bank, the Bank of Japan, the People's Bank of China, they've all engaged in unprecedented monetary expansion. This creates inflation, which we've all felt in our daily lives, but it also creates a crisis of confidence in fiat currencies. When the purchasing power of your dollars, euros, or yen is being eroded through inflation, smart money looks for alternatives. Gold has traditionally been that alternative, and we've seen gold perform extremely well over the past few years. But silver offers something unique. It's both a monetary metal with thousands of years of history as money, and it's an industrial commodity with irreplaceable utility. This dual nature means silver can catch a bid from both monetary demand and industrial demand simultaneously. There's also an interesting wealth effect happening right now, as traditional investments like stocks and bonds become increasingly expensive or risky, and as real estate prices have soared beyond the reach of many people, precious metals become attractive. But gold at over $2,000 per ounce feels out of reach for many retail investors. Silver, even at $77, still feels accessible. You can buy a 1-ounce silver coin for less than the cost of a nice dinner. This accessibility brings in millions of smaller investors who collectively represent enormous buying power. The Reddit Wall Street Bets phenomenon that briefly sent silver prices surging a few years ago demonstrated the power of coordinated retail demand, even though that particular episode faded. But it planted seeds in millions of minds. People who had never thought about silver before suddenly became aware of the supply-demand dynamics, the paper versus physical issues, and the potential for price appreciation. Many of those people are now back, but this time the fundamentals are stronger and the industrial demand is very real and sustained. Let's talk about what this means for the global financial system, because the implications are profound. Silver has been money for longer than any modern nation has existed. Cultures around the world have valued silver for millennia. The word for silver and the word for money are the same in many languages. When trust in fiat currencies erodes, people naturally gravitate back toward tangible assets with intrinsic value. We are seeing this not just with individual investors, but with entire nations starting to accumulate precious metals as a hedge against dollar dependency and currency instability. China has been accumulating massive amounts of gold and silver for years, though their exact holdings are somewhat opaque. Russia has built up substantial gold reserves. Central banks in emerging markets are diversifying away from dollar-denominated assets. This represents a fundamental shift in the global monetary architecture that has been in place since Bretton Woods, and especially since the end of the gold standard in 1971. Silver, as gold's more volatile and more industrially useful cousin, benefits enormously from these same trends. The energy transition alone would be enough to drive silver prices significantly higher from pure supply-demand fundamentals. But when you layer on the monetary dynamics, the banking system stress, the geopolitical tensions, and the massive debt burdens carried by governments worldwide, you create this perfect storm scenario. Multiple powerful forces converging to push silver higher from different directions simultaneously. Now, I want to address the question many of you are probably asking, can this continue? Is $77 just the beginning, or is this a top? Nobody can predict the future with certainty, but we can look at the fundamentals and make educated assessments. If industrial demand continues growing as projected, if the supply deficit persists, if monetary policy remains accommodative, and if geopolitical tensions continue driving safe haven demand, then there's a very strong case that silver has much further to run. Some analysts are projecting silver could reach $100, $150, or even higher over the next few years. The historical gold to silver ratio, which has averaged around 60 to 1 over long periods, currently sits much higher than that even with silver's recent gains. If that ratio mean reverts toward historical norms while gold remains strong, silver would need to appreciate substantially from current levels. If gold goes to $3,000 and the ratio hits 50 to 1, that implies silver at $60. We're already past that. If gold reaches $4,000 and the ratio tightens to 40 to 1, that's silver at $100. These aren't wild speculations. They're based on historical patterns and fundamental analysis. Of course, markets don't move in straight lines. There will be corrections and pullbacks along the way. Volatility in silver is legendary, and that cuts both ways. But the underlying trends appear robust and sustainable. I also want to talk about what this means for you as an individual, because that's ultimately why you're watching this video. Whether you already own silver or you're just learning about these dynamics, understanding the bigger picture helps you make informed decisions. If you own silver, this validates your thesis and suggests patience could be rewarded. If you don't own silver, you're probably wondering if it's too late to get involved. That's a personal decision that depends on your financial situation, risk tolerance, and investment time frame. What I can tell you is that major moves in commodities typically last years, not months. The uranium bull market of the 2000s saw prices rise over tenfold across several years, with multiple corrections along the way. The gold bull market from 2001 to 2011 was a decade-long run with periodic pullbacks that shook out weak hands. If we're indeed in a structural silver bull market driven by fundamentals rather than speculation, then thinking in terms of years rather than weeks makes sense. The trapped banks I mentioned earlier, they're not going to resolve their short positions in a few days or weeks. Covering those positions means buying physical metal over extended periods, which provides sustained buying pressure. Industrial users who previously relied on just-in-time delivery are now trying to secure longer-term supplies, adding more sustained demand. Investment demand from institutions who are just beginning to recognize silver's potential hasn't even fully materialized yet. Most pension funds, endowments, and sovereign wealth funds still have minimal or zero exposure to silver. Here's something else to consider: the psychological aspect of the market. Price movements create momentum, and momentum attracts attention. As silver makes new highs and generates headlines, more people become aware of the opportunity. This increased awareness drives more demand, which pushes prices higher, which generates more headlines and more awareness. It's a self-reinforcing cycle that can continue much longer than rational analysis might suggest. We saw this with Bitcoin, we saw it with GameStop, and we're seeing it now with silver, except silver has actual fundamental supply-demand dynamics supporting the move rather than pure speculation. The perfect storm terminology really is appropriate here. You have supply constraints that took decades to develop demand surges from multiple sources, hitting simultaneously a paper market potentially breaking down under the weight of physical demand, monetary policy, creating inflation and currency concerns, geopolitical instability, and massive institutional short positions needing to be covered. Any one of these factors alone would be enough to drive prices higher. All of them together create explosive potential. What's particularly interesting is how mainstream media has been relatively slow to cover this story. When Bitcoin hits new highs, it's front-page news. When tech stocks surge, every financial channel covers it extensively. But silver hitting $77 hasn't received nearly the same attention yet. This suggests we're still relatively early in terms of mainstream awareness. When your neighbors and coworkers start asking you about silver, when it becomes a regular topic on CNBC and Bloomberg, that's when you know the move has reached a mature phase. We're not there yet. The coming months and years could reshape the entire precious metals market and potentially the broader financial system. Silver has always been the poor man's gold, the accessible way for regular people to protect their wealth and participate in precious metals. If these dynamics continue playing out, we could see a massive transfer of wealth toward those who recognized the opportunity early. Not through gambling or speculation, but through understanding fundamental economics and positioning accordingly. This is why education and awareness matter so much. Most people are completely unaware of what's happening in the silver market. They don't understand the supply-demand dynamics, the monetary implications, or the industrial revolution taking place that depends on this metal. By watching this video, by taking the time to understand these concepts, you're already ahead of the curve. You are equipped to make informed decisions, rather than being caught off guard when silver becomes a mainstream story. So if you found this information valuable, if this analysis has helped you understand what's really happening in the silver market, do me a favor right now and hit that subscribe button. We're committed to bringing you this kind of in-depth fundamental analysis on precious metals, economics, and financial markets. This is information the mainstream media either doesn't understand or doesn't want you to know. By subscribing, you'll never miss our updates as this historic situation continues unfolding. And let's keep this conversation going in the comments. I want to hear your thoughts, your questions, and your own analysis of what's happening. We're all learning and growing together through this remarkable period. Subscribe now, and let's navigate this perfect storm together.